We have the management of Yes Bank now talking. Let's cut across to that press conference.
Steady growth in advances and far improving CASA contribution, which I will talk about further. As you will also observe, the net interest margin of the bank has improved to a level of 3.4% compared to 3.2% a year ago, which is an improvement of 20 basis points in the last 12 months. And basis current developments, future outlook, we have every reason to believe that NIMs should improve by another 10 to 15 basis points going forward. Non-interest income of the bank grew in this quarter by a level of around 36%, and for the year as a whole, non-interest income was 32.5% higher than the previous year at an absolute level of 2,712 crores. A little bit on the overall productivity and return ratios. For the year 2016, our ROA ended at a level of 1.8%, and return on equity of the bank has improved to an overall level of 21.1%. The book value of the bank share now stands at 327 rupees 80 paisa, which is an improvement of approximately 47 rupees since the last fiscal year ending March 2015. And this is despite the fact that the board, on the recommendation of the management, has approved 100% dividend, literally at the beginning of our 12th year of operations. And we will be distributing about 20% of our profit and retaining 80% therefore, and which is why we see an overall significant improvement in the overall book value of the bank. I would also like to add to this that our cost-to-income ratio, despite very significant investments in branch infrastructure, as I will speak about, additions to our headcounts, we've added over 4,200 people over the last 1 year, and almost 1,270 odd people in the last one quarter, which is compared to the previous sequential quarter, we had added 777 people. So we are investing greatly in our human resources. We are investing in our branches. The number of branches in this quarter was the highest ever that we have rolled out. As many as 110 branches were activated in the quarter Jan to March 2016. Moving on to some of the balance sheet metrics, I'm very happy to share with you my favorite number, CASA. This is improved overall year-on-year by 48.7%, and in absolute terms, our CASA now stands at 28.1% compared to 23.1% 1 year ago, which represents an overall increase of 5% in CASA in 1 year's time. Further, in terms of the overall contribution from a granular and from a diversity standpoint, our CASA and retail FD composition has improved quite significantly to a level of now 54.5% as of March 31st, 2016, compared to 47.9% 1 year ago. So basically, retail FDs plus CASA has improved by 6.6% over the last 12 months. And this in itself is a very significant improvement, reflecting on the way Yes Bank's outreach has improved and also its brand presence and brand impact, because retail banking, as you know, has to create a very strong brand pull. So this is a very good development, and we see these numbers sustaining, and I'm very confident that we will get to a CASA of 40%, very ahead of our original target of 2020, possibly even as soon as 2018. Loans and advances this year grew by 30%. 30% fiscal March 16 over March 15. And this is a fairly significant rise, which is also in a way reflecting the underlying growth impulses, which are now in a way getting restored in the bank, having been somewhat more cautious in the preceding couple of years. So overall loan growth has been 30%, and our total loan book stands at 98,210 crores approximately. I'd like to also mention that the sequential growth in loans has been 16.4%. So March over December 2016 over 15, in one quarter, our sequential growth has been as much as 16.4%. And this growth is coming from our SME businesses, from our consumer retail businesses, from educational and social infrastructure businesses. So it's a fairly granular and fairly diverse growth, and we are quite certain that we'll be able to maintain growth rates of 27 to 30% as far as advances are concerned going forward. The overall composition of the retail and SME book, which we call business banking, has improved to a level of 34.9% compared to approximately 32% only about a quarter ago, and the corporate composition of the bank's loan book stands now at 65.1%. I'd like to also add that our overall deposit growth this quarter has been fairly satisfactory at an overall level of 10.1% sequentially and overall 22.5% year on year. So these are the key balance sheet data points. Capital adequacy of the bank now stands at a level of 15.5%, and Core Tier 1 is at an overall level of 10.7%. I'm pleased to share with you that in this quarter we raised 1,845 crores of Basel III compliant Tier 2 bonds, and for the year as a whole, we have raised 3,900 crores of the Tier 2 Basel III compliant bonds, which is ensuring that we maintain a fairly satisfactory overall CAPAD ratio at now a level of 16.5%. The total assets of the bank now stand at a level of 1,65,000 crores, having grown 21.4% year on year. So we are, ladies and gentlemen, now a small, large bank, having crossed the 1,50,000 crore total asset mark in this particular quarter. I'm very happy to share that we are entering into a